Good afternoon to all of you. We are now starting the session of our conference that deals with the Kingdom of Japan. And among our panelists, we have the kind participation of Adam Posen, who is the president of the Peterson Institute. Adam, you are a old Japan hand, if I can put it this way. Allow me to ask a very basic thing for us. Could you perhaps outline what is actually Abenomics and what are its so-called free arrows?
I think Abenomics is first and foremost a statement by the Japanese government, by the current prime minister, that their economic destiny is more in their own hands than previously was thought. It's about the idea there are affirmative actions that the government of Japan, business in Japan, Bank of Japan can do that will affect their course of action, rather than China exists or demographics go against Japan and that's just the way it is. So what are the three arrows? The three arrows, as others in this audience know, are images from a legend from Japanese history, but in PowerPoint terms, there's three pieces to it. There is a monetary piece, aggressive purchases of long-term bonds and other assets to end deflation, which the Bank of Japan is well down the path to doing. There's a fiscal piece, which was to get Japan's fiscal balance on a more sustainable path. I say more sustainable because we're not there yet, and obviously that's something Moody's and all of us can discuss. But the key measure was raising the consumption tax, which they've now committed to doing. And then the third arrow, which is the one people worry about the most, is the so-called structural reform, which is all the other things that should be done if the macro picture is okay to try to raise the ongoing growth rate.
Okay, so the key one is the third arrow. Could you perhaps elaborate what we actually have in terms of the third arrow so far? Or perhaps what we don't have in terms of the third arrow so far?
Well, this is what's interesting. You mentioned me being an old Japan hand, which I guess I am now. And everybody who's been in the Japan game for a long time in markets, even in Japan, is always tending to look at the glass as 3/4 or 7/8 empty. That there's always been promises of structural reform and not much has happened. Now, I think, in my opinion, there have been three pieces of important structural reform that are already underway. They're not yet finished by any means. But one is the commitment of the Abe government to proceed as a full partner in the TPP, Trans-Pacific Partnership trade talks, which is going to force real reforms in agriculture, in certain forms of distribution, and particularly in some services like insurance. And these are things we've been battling about. U.S. has been trying to batter open for 20 years. But all reports from the TPP negotiations are accepting rice, just as the U.S. accepts sugar, that they're making a lot of progress. The second piece is trying to get women in the Japanese workforce a higher rate of participation, a better rate of utilization. To me and to many people who work on the Japanese economy, this is the found money just waiting to be picked up off the ground. Women have a near educational parity, in some fields above parity with men in Japan, but essentially by the time they reach 30, they're forced out or topped out. And so there's this huge untapped resource that can help with fiscal sustainability, it can help with labor force growth. Now, nothing transformative has happened yet. But Prime Minister Abe has made more of a commitment in this direction, has talked about providing schools and daycare places to allow women back in the workforce, has talked about essentially a weak form of affirmative action. Again, is the glass 3/4 empty? Maybe, but this glass has been dry for a very long time, so this is progress. And then the third area is improving the tax code, not just in the fiscal sense, but structurally making it more sensible. Japan has the highest listed tax rate for corporations except for the U.S. They've reduced it, but not very much. They just got rid of a very distortionary auto tax, which is helpful to consumption. They have to rethink a number of things about tax collection from small businesses, which I think they're on a path to doing. These are all things that, on one hand, help the fiscal situation, but importantly are about removing distortions in the Japanese economy. The final thing just to mention for our audience is I know there's going to be a lot of discussion of China, and there's a lot of excitement about the Shanghai Free Enterprise Zone. They are now talking about doing a similar kind of zone in Japan, which would be a regulation-free zone, in which you could also have experiments with entrepreneurship and demonstrate how lesser regulations help.
Okay. So allow me to put in those terms. We have arrow 1 and arrow 2 out there. What happens if we don't manage to get arrow 3? You certainly remember the wheel estimations that we saw about Japan that show that if you only have arrow 1 and arrow 2, you actually are reducing the trend growth rate of the Japanese economy.
Yeah, I think the WIO, the IMF estimates are in good faith, but and I largely agree with them, but I think they exaggerate the problem slightly in two senses. First is the mix of expansionary money and tightening fiscal. The expansionary money, I think, is going to have a sustained impact for a few years because you're getting out of deflation and you're changing people's price-setting behavior. And whereas the fiscal impact, though it may be very sharp in the first half of 2014, I think is going to be temporary. And there's some room to offset it, so we'll see. But the second thing, I think, is the question of, does Japan hit a wall? And this is the kind of sovereign issue that you and I and our group talk about. And in my opinion, just speaking for myself, I view the structural reform agenda as necessary, but it's okay if it takes a few years. I don't view the Japanese debt as on a precipice about to tip over, especially now that the consumption tax has been raised. Let me be clear, that doesn't mean I still think debt's going to be rising for a while. They haven't solved the problem, but it's just that they've made a significant down payment. And since so much debt is domestically held and held by retail and in the financial system, you're not going to have a crash here the way you would in some other countries.
Okay. I will not make a comment on our position concerning the sustainability of the Japanese debt.
Well, I'm sure that others can read it from you or get it from you during the conference.
But allow me to go back to your first statement. Does it actually matters, right? Even if we manage to get, or if the Japanese manage to get all the free arrows out there, those structural things are still going to be there. So a shrinking population, an aging population, the stock of debt that you just mentioned. So even if they manage to get this off the track, will this change fundamentally the Japanese economy?
Well, it's like the old Clinton question: how do you define fundamentally? So one thing which I think a lot of people miss out on, and I tend to harp on, is if you look at per capita productivity growth in Japan from, say, 2002 to 2008, it's actually about the highest in the G7. It's quite high. It's nothing to compare to Japan in the 80s and 90s, but it's over 2% on a consistent basis, which says there's some fundamental ability of Japan to use technology and to grow. And so then in terms of integrating women in the workforce, realistically, how many are you going to get in? You could get in, if all went well, 10 million. More realistically, 2 million. But even 2 million is enough to offset the shrinking of the labor force for several years. And so you're talking about an economy that still is capable of technological growth, that can, for a non-trivial period, offset demographic decline. That's enough to matter. And then if you cut the deficit a bit, it's like Social Security in the U.S. You can kind of fix the problem by cutting at it a little bit along multiple dimensions. Japan is not the basket case, in my opinion, that some people would have it, that it's pointless. I think a little bit of progress in each dimension helps.
In other terms, money and time in Japan, according to what you just indicated. With that very good introduction, let me now open to the rest of our panel.